All right, ready to dive deep into Warren Buffett's 2015 letter to Berkshire Hathaway shareholders. You send over some excerpts from the letter and some pretty interesting discussion questions. So let's get into it.
One of the things that makes this letter so interesting is it's not just the typical numbers and financials.
Yeah.
He really shares his philosophies, his worldview, even his optimism for the future of America. It's like a, a masterclass in communication
It
almost.
really is. So he starts off by highlighting Berkshire's 2015 performance. Their net worth increased by $15.4 billion,
Wow.
boosted the per-share book value by 6.4%, which on its own sounds pretty impressive.
It is, but he really emphasizes that the true value of Berkshire Hathaway, the intrinsic value, is much higher than what's reflected just on the balance sheet.
Right.
And that's really attributed to their wholly owned businesses. And he even hints at being like very eager to buy back shares if they ever dip to 120% of book value.
Because that would instantly boost the value for the remaining shareholders.
Exactly, exactly. It's a real sign of confidence in their long-term prospects.
Definitely. Now let's talk about some of these powerhouse businesses that are driving this success. BNSF Railway had a really good comeback year in 2015, after a little bit of a rough 2014. They even spent a record $5.8 billion, which is almost triple their annual depreciation charge on capital expenditures.
Wow.
That's huge. That's a massive investment.
It is, but it makes sense when you think about it. BNSF moves 17% of America's intercity freight.
Wow.
So it's a vital part of the nation's economic engine.
Right.
And to keep that position, they need to be constantly investing and looking ahead.
Absolutely. Now, speaking of key players,
Yeah.
the Powerhouse Five, we have to talk about those. BNSF, Berkshire Hathaway Energy, Marmon, Lubrizol, and IMC. Combined, they earned $13.1 billion in 2015, a $650 million increase from the previous year.
It shows the power of compounding, Even without issuing a bunch of new shares, that consistent growth really adds up over time.
Yeah. And then in 2016, they added another powerhouse to the lineup, Precision Cast Parts Corp., or PCC.
Oh, yeah.
They make aerospace components, and Buffett was so impressed with the CEO, Mark Dunnigan, he compared him to a modern-day Da Vinci.
He has such a knack for identifying those truly exceptional managers and trusting them to run things, giving them the resources they need, and just letting them do what they do best.
Yeah. And it seems like that's a recurring theme in his investment philosophy. He prefers owning substantial portions of great companies over having 100% ownership of mediocre ones.
Absolutely. He even makes the comparison to owning a piece of the Hope Diamond versus a whole bunch of rhinestones.
Right.
It's a brilliant analogy, right?
Yeah.
Really sums up his focus on quality.
Yeah. He also reveals what he calls his Big Four investments: American Express, Coca-Cola, IBM, and Wells Fargo. Each percentage point increase in Berkshire's ownership of these companies adds $500 million to their annual earnings.
These companies represent those classic, strong brands, long track records of success. All those things really align with his approach to value investing. He's been patiently building these positions for decades.
Right.
The returns are a testament to long-term thinking.
It really is amazing. And what I found really interesting is how he views passive investing. He says that Berkshire's willingness to invest passively in businesses that they don't control actually gives them a huge advantage over companies who are just solely focused on acquisitions. He even jokingly compared it to doubling your chances of finding a date on Saturday night.
There's that classic Buffett humor, right? But he's making a really important point. You got to be flexible and open-minded.
Yeah. Now, shifting gears a little bit to his views on the American economy. He's not going into all that doom and gloom that we see so much in the media these days. In fact, he says that babies born in America today are the luckiest crop in history.
It's a pretty bold statement.
It is.
But he backs it up by highlighting the incredible potential of productivity gains. Even with a modest, let's say, 2% annual growth rate, real GDP per capita can really increase significantly over a generation, potentially a $76,000 increase in income for a family of four.
Wow.
So there's real reason for optimism.
Yeah, that's a really powerful argument.
Of course, he doesn't shy away from the fact that there will be debates and challenges in how you distribute those gains, but his optimism about America's future really shines through. He compares the U.S. economy to a golden goose that just keeps laying larger and larger eggs.
That's a good analogy.
He really believes in our resilience and ingenuity.
Definitely. And to illustrate that power of productivity gains, he uses farming as a prime example. He shows how, thanks to innovation, we can produce so much more food now with a fraction of the workforce that was needed in the past.
And that's a fascinating example of progress, right? And it frees up all that labor to go into other sectors, driving even more economic growth.
Yeah.
But he also acknowledges, those potential downsides.
Right. He doesn't gloss over the fact that those gains can lead to job displacement, hardship for some workers, especially in industries that are going through these massive transformations.
Right. And he actually brings up the need for safety nets to support those people who are displaced by these big technological advancements. It's something we're still grappling with today.
Absolutely. So we're seeing this theme of long-term optimism, but he's also a realist.
Exactly.
He doesn't sugarcoat the challenges. Before we jump into climate change and the future of Berkshire Hathaway, what stands out to you so far in this letter?
It's really his unshakable faith in the power of American innovation and the market system. He's seen firsthand how those forces can create so much wealth, improve lives.
Right, right. He's definitely a long-term optimist, but as you said, he's a realist too. He doesn't
Yes.
sugarcoat things.
Exactly. But he believes in our ability to overcome those challenges.
Yeah, it's a message that really resonates, especially during times of uncertainty and change like we're in now.
Absolutely.
All right, ready to delve back in?
Oh yeah, there's so much more to uncover in this letter.
Let's explore his views on climate change and how that might impact Berkshire Hathaway's insurance business.
Okay.
He addresses it pretty directly in response to a shareholder proposal. He acknowledges that, yeah, climate change is likely a major problem. He even invokes Pascal's wager and Noah's law, arguing that even a small chance of a catastrophic outcome, warrants action.
It's a surprising comparison.
It is.
But it highlights how seriously he takes the issue.
Absolutely.
Yeah.
However, he goes on to explain why he doesn't think climate change is likely to be a big financial risk for Berkshire's insurance operations. He points out that insurance policies are repriced annually, so higher risks basically would just lead to higher premiums.
So counterintuitively, climate change could actually make Berkshire's insurance business more profitable.
Right.
It's fascinating how he can identify opportunities where others see threats.
It really is.
You got to think differently.
Yeah. And it emphasizes how important it is to understand the specific dynamics of different industries when you're assessing risk.
For sure.
Now, let's shift our focus to the future of Berkshire Hathaway. He lays out his blueprint for continued success under his eventual successors.
Okay.
He emphasizes improving subsidiaries, making those what he calls bolt-on acquisitions, taking advantage of investment opportunities, repurchasing undervalued shares, and pursuing occasional large acquisitions when they make sense. He's really setting the stage for a smooth transition and sustained growth.
Yeah. He's always thinking long term.
He also stresses that Berkshire will avoid issuing new shares. That would dilute the value for existing shareholders. Again, long-term thinking, prioritizing those investors.
It's a hallmark of his leadership.
Right.
Create value, think long-term, avoid those flashy short-term moves.
And that commitment to sustainability is reflected in Berkshire's corporate culture, which he talks a lot about in the letter. He proudly mentions that in 2015, not a single person was hired or left their 25-person corporate team.
That's incredible.
For a company that size.
Yeah, especially for a company as large and influential as Berkshire. What's the secret?
I know. It really speaks volumes about that culture of loyalty, trust, shared values that he's cultivated.
Definitely.
And then he also highlights the dedication of their managers. He compares them to all-stars who are running their businesses as if they were their family's only asset.
It's a high standard. It reflects the level of ownership and commitment he expects from his team. And it's clearly a key ingredient in Berkshire's success.
Seems like he's really created this decentralized structure. Empower talented individuals, let them operate with autonomy, make the best decisions for their respective businesses.
It's worked for them. It's delivered those impressive results over the years.
Now let's step back and look at this letter, in a broader context. It was written in 2015, but a lot of its themes and insights are still so relevant today.
Absolutely. One of the most important takeaways is just that value of long-term thinking and patience in investing. He's always advocating for buying those great businesses at fair prices, holding them for the long haul. Yeah. It's about building that portfolio of high-quality assets, generate those sustainable returns over time. He's not interested in chasing trends or trying to time the market.
Right.
He's in it for the long game.
Another key lesson is identifying and nurturing those exceptional managers.
Right.
He knows that people are the most valuable asset. He seeks out those leaders who are not just talented, but also aligned with his values.
He empowers them, creates that decentralized structure, fosters that flexibility and responsiveness. It's a model that has clearly worked for Berkshire Hathaway over the long run.
Absolutely. Another crucial point is the need for balance. He's a staunch capitalist, but he also recognizes that there's a need for social responsibility. He gets it. Economic progress can come at a cost for some members of society, and he advocates for policies that kind of mitigate those costs, promote a more equitable distribution of wealth.
It's a nuanced perspective, shows that he's not just focused on maximizing profits, but also considers that broader impact.
Exactly. Before we move on, I want to take a look at this table detailing Berkshire's 15 largest common stock investments at the end of 2015.
All right.
Remember, this is just a snapshot in time.
It's a fascinating glimpse into his portfolio. That preference for those well-established companies, the strong brands, the durable competitive advantages.
It's really interesting to see how these holdings have performed since then. Some have continued to thrive, others have faced some challenges.
It's a good reminder that even the most successful investors make mistakes, right?
Yeah.
Diversification is key to mitigating risk.
Absolutely. Now, as we wrap up part one of our deep dive into Warren Buffett's 2015 shareholder letter, I want to leave you with a thought to ponder. If you were in Buffett's shoes, what would you be focusing on in today's economic climate?
That's a great question for our listeners. What opportunities are out there? What risks are you most concerned about? How would you position yourself to navigate all these uncertainties?
There's always something new to learn from Warren Buffett, and this is just the beginning of our deep dive into his wisdom. We'll be back soon to uncover even more insights from this 2015 shareholder letter.
Looking forward to it. Picking up where we left off, Buffett's decision to webcast the Berkshire Hathaway annual meeting in 2015 was a pretty big deal.
It was.
It was really a step into the digital age for the company.
It was. He even joked in the letter about people no longer needing to trek all the way to Omaha to make sure that he and Munger haven't drifted off to La La Land yet.
Right.
He's got such a way of making these big decisions feel relatable and down to earth.
It's that self-deprecating humor, right? I think that's one of the things that makes him so likable. But this decision also reflects a deeper principle. Transparency. Equal access to information for all shareholders.
Right. It levels that playing field.
Exactly.
Small investors, big institutions, everyone has access.
Everyone's on the same page.
Which is something he clearly values.
Absolutely. It ties back to treating every shareholder with respect,
Well,
regardless of how much they've invested.
Exactly. Exactly. All right, let's revisit that corporate culture at Berkshire Hathaway, because he really seemed to emphasize that in the letter.
He does.
He proudly states that not a single person was hired or left their 25-person corporate team in 2015.
It's remarkable.
For a company that size, that kind of stability is almost unheard of.
I know. What's the secret?
What is the secret? What's the secret sauce?
I think it comes down to hiring the right people, providing them with the resources they need, and then trusting them to do their jobs.
Right, he really believes in that.
He doesn't micromanage, he empowers them.
And it seems like that approach extends to how Berkshire Hathaway manages its subsidiaries as well.
Oh, absolutely. Buffett and Munger, they emphasize they don't interfere with the day-to-day operations.
Right.
They trust those managers to make the best decisions.
So those subsidiaries can operate with more agility, more responsiveness.
Exactly. But they still benefit from the financial strength and stability of the parent company.
Right, so it's kind of the best of both worlds.
It's a powerful combination, and clearly it's delivered some impressive results over the years.
Definitely. Now, let's shift gears a little bit and explore some of the risks that Buffett outlines in his letter. He starts by acknowledging that, typical risk factor disclosures in corporate filings, they can be kind of limited.
They're not always the most useful.
Right. He says the truly important risks are usually already well known.
Yeah.
It's more about assessing the probability, the cost, the timing of those risks.
It's a more practical approach, right? It's not just listing potential threats.
Right. It's about the implications.
Yeah.
And then he goes on to highlight some specific risks facing Berkshire Hathaway, like declining coal volumes for BNSF, the potential disruption of driverless cars for Geico and their auto dealerships, and the evolving landscape of renewable energy for Berkshire Hathaway Energy.
It's a diverse set of challenges.
It is, but he doesn't shy away from them.
No, he expresses confidence in their ability to adapt.
And he addresses the shareholder proposal regarding climate change.
Oh, right, yeah.
He acknowledges that it could have an impact.
Definitely a concern for the planet.
But then he explains why he believes it's unlikely to be a big financial risk for their insurance business. And he points out that insurance policies are repriced annually.
So higher risks would just lead to higher premiums.
Exactly.
So it's almost like climate change could make Berkshire's insurance operations more profitable.
Right. It's that counterintuitive thinking again.
He's always looking at things from a different angle.
And again, it just emphasizes the importance of understanding those industry dynamics.
Right. Context is everything.
Now, throughout the letter, he keeps coming back to this idea of productivity gains.
Yeah, he's a big believer in that.
He sees it as this key driver of economic growth and prosperity.
It's all about innovation and efficiency.
Right. And he uses all these examples: American agriculture, improvements at BNSF and Geico.
It's amazing how technology can transform entire industries.
But he doesn't ignore the potential downsides, like job displacement. And he emphasizes the need for safety nets.
Yeah, to help those who are affected by those changes.
The balanced perspective, right?
Definitely, he's not just blindly celebrating progress.
And one of the most insightful parts of this letter is his discussion of intrinsic business value.
Yeah, how do you actually measure the true worth of a company?
Exactly. He admits it's impossible to calculate it perfectly, but he gives us a framework for making a reasonable estimate.
Okay, so what are the key factors?
He highlights two quantitative factors: per share cash and investments, and earnings from Berkshire Hathaway's businesses.
So those are the numbers, right?
But then he says those are just two pieces of the puzzle.
Okay, so what's missing?
The qualitative factors, things like the quality of management, brand strength, competitive advantages.
It's not just about crunching numbers, you have to understand the business itself.
Right. And then he dives into these four major sectors of Berkshire's operations: insurance, regulated capital-intensive businesses, manufacturing, service and retailing, and finance.
He really breaks it down.
He does. He provides all this information about each sector: the financials, the competition, the management teams.
It's like a masterclass in business.
It is. And he shares insights into his approach to capital allocation, risk management, long-term value creation.
This letter is a treasure trove of wisdom.
It really is. And one thing that stands out is the consistency of his message over the years: value investing, long-term thinking, ethical business practices.
He's walking the walk.
He is.
He's not just talking the talk.
And his track record proves it.
He's an inspiration to so many investors.
Before we move on to the final part, I just want to take a moment to appreciate how much knowledge he shares in this letter.
It's amazing, isn't it?
It really is. He covers so much: productivity, risk management, corporate culture, the American economy.
It's like he's giving us a glimpse into his mind.
And he does it in such an engaging way with those anecdotes and examples.
He's a great storyteller.
He is. All right, ready to explore the final gems in this letter?
Absolutely. Let's see what other wisdom he has to share.
Welcome back to our deep dive into Warren Buffett's 2015 letter to Berkshire Hathaway shareholders. We've covered a lot of ground, but there are always those hidden gems, those little nuggets of wisdom that we can still find.
Oh, absolutely. I mean, we've seen how he explains these really complex ideas in simple terms, his philosophies on business and investing. He even touches on the future of America. It's really like getting a personal lesson from one of the greatest investors of all time.
Yeah, he really breaks things down in a way that anyone can understand. And speaking of lessons, let's go back to his emphasis on productivity gains, how vital they are for economic growth.
He makes a great point. It's essential for creating wealth, improving living standards, and he uses those examples like farming and railroads and insurance to show how innovation, efficiency can completely revolutionize entire industries.
Yeah, and how that frees up labor for other sectors, leading to a more dynamic and prosperous economy.
It paints a really clear picture, but he also acknowledges those challenges that come with progress.
Right. He doesn't just focus on the positives.
He recognizes those advancements can displace jobs and emphasizes the need for those safety nets.
Right, to support the people who are impacted by those changes.
It shows a deeper understanding, that it's not just about celebrating the good parts of growth. There's got to be some thought about how to manage the disruptions that come with it.
Absolutely. He also challenges the way we typically evaluate businesses. He's critical of over-relying on metrics like EBITDA.
Right. Those can be misleading.
Yeah, they don't always give you the full picture of what a company is truly worth.
It's a reminder to really dig deep, look beyond those surface-level numbers, understand the fundamentals.
Now let's shift gears a bit and talk about corporate culture, something that's clearly very important to him. He spends a good portion of the letter praising the dedication, the talent, the integrity of Berkshire Hathaway's managers and employees.
He really emphasizes that shareholder-oriented mindset, that commitment to running those businesses as if they were their own.
Like their family's only asset. It really speaks volumes about the kind of culture he's built, one where everyone feels empowered.
Acting as responsible stewards of the company's resources.
Exactly. And then he shares that anecdote about how not a single person was hired or left their 25-person corporate team in 2015.
It's pretty remarkable. It points to that strong sense of loyalty, shared values.
It really does. As we wrap up this deep dive, I want to highlight one final thought from Buffett that really stuck with me. His unwavering belief in the future of America.
Yeah, despite all the challenges, the uncertainties, he remains so optimistic.
He really does. It's actually quite inspiring and reassuring.
Especially in times like these.
He refers to the American economy as this golden goose that will keep laying larger and larger eggs.
That's a great metaphor.
Yeah, it captures that faith he has in our resilience, ingenuity, our ability to overcome obstacles and keep creating prosperity.
It's a nice reminder that even when things feel uncertain, there's reason to be hopeful.
Absolutely.
Yeah.
Well, there you have it. We've explored the key insights, the wisdom from Warren Buffett's 2015 letter to Berkshire Hathaway shareholders. It's been a fascinating journey, getting a glimpse into his mind, his thoughts on business, investing, and the world around us.
It's incredible how much he manages to pack into a single letter. Those timeless pieces of advice, applicable to all of us.
It really is. And remember, this is just a starting point. We encourage you to read the full letter, continue exploring all that knowledge he's shared over the years.
Keep learning, keep asking those questions, and keep an open mind.
Those are some of the most valuable lessons we can learn from Warren Buffett, and they could apply to every aspect of our lives.
I think that's a great note to end on.
That's it for this deep dive. We'll see you next time for another insightful exploration of the world around us.